This week, Bitcoin rallies towards $60,000, Ethereum recovers, and Solana breaks out. Regulatory wins in Indonesia, Trump's new crypto platform, and Grayscale's latest XRP move are setting the stage for major developments. CPI data is influencing Bitcoin's price, while India remains a global leader in crypto adoption. Plus, major institutional Bitcoin buys keep piling up. Let's break down all the key events and what they mean for your next crypto move. Let's kick things off with Bitcoin, which had an exciting week starting on Sunday, September 8th. Bitcoin began trading around $54,000 after rebounding from the previous week's downtrend. The lowest point came early at $53,800, but Bitcoin quickly bounced back. It tested resistance at $58,000 twice before finally breaking through, reaching $59,900. As the week went on, Bitcoin stabilized above $57,000, showing strong resilience. The US CPI data released this week also played a role in boosting Bitcoin's price. This price movement was closely tied to the release of the Consumer Price Index, CPI, on September 11th, where inflation held steady at 2.5%. Lower inflation generally calms markets because it reduces the likelihood of aggressive interest rate hikes by central banks. In the financial world, a stable inflation rate can positively impact risk assets like Bitcoin, which thrives in lower interest rate environments. As inflation data was released, Bitcoin jumped from $55,710 to nearly $58,000, showing the market's sensitivity to macroeconomic conditions. This kind of news is always crucial for crypto investors to watch, as traditional financial indicators often influence crypto markets more than we realize. Meanwhile, Ethereum has been following a similar path. It started the week around $2,200 and climbed to $2,428 by midweek, showing a strong recovery. After weeks of being under pressure, Ethereum's rise is a sign that market confidence in the broader crypto space is growing. Solana, which began at $128 and dipped to $126, managed to break out midweek, finally reaching $138. This movement signals that the entire market is waking up from the previous correction, with key assets gaining momentum again. For those invested in these altcoins, it's a positive sign of recovery, suggesting that the worst of the pullback may be over for now. In Indonesia, Binance's subsidiary Toko Crypto secured a full license from the Commodity Futures Trading Regulatory Agency, making it only the third exchange to achieve this status. More than 30 exchanges have applied for this license, underscoring how competitive the Indonesian market is becoming. The significance of this win for Binance can't be overstated. It shows Binance's commitment to dominating Southeast Asia's rapidly growing crypto market. This move also points to the increasing global regulatory acceptance of crypto, especially in regions where demand is skyrocketing. Institutional involvement continues to make waves, with Metaplanet, often referred to as Asia's MicroStrategy, purchasing an additional 300 million yen worth of Bitcoin, bringing its total holdings to nearly 400 BTC. MicroStrategy itself hasn't slowed down either, buying another $1,110 million worth of Bitcoin. With 244,800 BTC now in its reserves, valued at over $9,400 million, MicroStrategy remains one of the largest corporate holders of Bitcoin globally. Institutional buying of this magnitude sends a clear message. The big players are betting on Bitcoin's long-term value. Bitcoin's trading volume has also hit a new record, with $2,874 billion in trades from January to August 2024. This is a 20% increase from the 2021 bull market peak. It's a strong indication that despite the ups and downs, the interest and activity around Bitcoin have only intensified. This growth can be tied to several factors, including crypto ETFs and expectations of rate cuts by the Federal Reserve, which have provided the market with a tailwind. For investors, this surge in volume shows how much liquidity is flowing into Bitcoin, making it an attractive asset to hold even during periods of uncertainty. During the first ever debate between US Vice President Kamala Harris and former President Donald Trump on September 10th, something notable happened. crypto was left completely off the table. Despite the debate focusing on the economy, abortion rights, immigration, and foreign policy, neither candidate mentioned digital assets, a topic of growing importance. This omission seemed to have an immediate impact on Trump's chances in the upcoming election, as his odds of winning dropped by 3 percentage points on the decentralized betting platform Polymarket, sliding from 52% to 49%. As the US elections are crucial for the crypto industry, the outcome of such debates can have ripple effects on the market. After the debate, we also saw a slight drop in the price of Bitcoin, likely reflecting market uncertainty over future crypto regulations, especially since Trump's campaign has previously signaled support for clearer regulations and reforms. For crypto investors, staying attuned to these political events is essential, as the policies and stances taken by candidates will shape the regulatory landscape for years to come. Peter Brandt, a well-known veteran trader, recently predicted that Bitcoin could surge to $150,000, driven by a technical formation known as the cup and handle. This bullish pattern suggests that once Bitcoin breaks through resistance at $73,734, it could climb significantly higher, potentially reaching $150,000 next year. This forecast highlights how technical analysis continues to shape the long-term view of Bitcoin's price trajectory. While Brandt acknowledges the potential for short-term dips, his overall outlook remains strongly optimistic, reinforcing the sentiment that Bitcoin's long-term prospects are bright. Circling back to the CPI data, it's important to understand its wider impact on financial markets, including crypto. Lower inflation reduces the need for central banks to raise interest rates, which benefits riskier assets like cryptocurrencies. This week, we saw that as inflation data was released, Bitcoin jumped, showcasing how macroeconomic indicators directly influence crypto prices. For crypto investors, staying attuned to these economic reports is critical, as they often set the tone for market sentiment in the short and long term. Now let's talk about India, which continues to lead the world in crypto adoption. According to a new Chainalysis report, India has topped the global list for the second consecutive year despite the country's hard regulatory stance. The strength of India's crypto community lies in its vast number of users, both on centralized and decentralized platforms. Indian traders and investors are navigating the complex regulatory environment with determination, making India a key player in the global crypto ecosystem. This resilience showcases the power of a robust and committed community, which continues to drive innovation and adoption in the space. For global crypto investors, India's rise serves as a reminder that even in the face of regulatory challenges, adoption can flourish. Grayscale made headlines this week with the launch of its XRP Trust, designed for institutional investors seeking direct exposure to XRP. While not an ETF just yet, this move is a crucial step toward that goal. The introduction of this trust could pave the way for a fully fledged XRP ETF in the future, which would open up investment opportunities for retail investors and likely increase demand for XRP. This is especially significant following the conclusion of the SEC lawsuit earlier this year, which already boosted confidence in the asset. Grayscale's initiative shows growing institutional interest in XRP, which could significantly enhance its adoption and price potential. After this announcement, XRP saw an immediate 12% pump, rising from 52 cents to nearly 59 cents, indicating strong market reaction to the news. In more news, Donald Trump's crypto project, World Liberty Financial, is set to launch on September 16th. Trump has promised that this platform, led by his sons, will offer decentralized finance, DeFi services, including borrowing, lending, and stablecoin use. Trump's push into the crypto space has garnered attention, particularly within the community, as he has been vocal about his support for clearer crypto regulations. His promise to fire SEC Chair Gary Gensler if elected in 2024 has also added fuel to this narrative. Trump's entrance into crypto is significant because it signals that the sector is not just a niche market anymore. It's becoming mainstream, with major political figures aligning themselves with the industry. On the regulatory front, the English High Court ruled that Tether's USDT stablecoin qualifies as property, meaning it can be subject to legal claims like other assets. This ruling is a major development for the crypto industry because it offers more legal clarity for stablecoins. It could pave the way for greater acceptance and adoption of stablecoins in traditional financial systems, especially as more legal frameworks are built around digital assets. For the broader crypto market, this type of legal recognition helps solidify crypto's place in the global financial system, making it more secure and trusted for both retail and institutional investors. Finally, Standard Chartered has set a bold price target for Bitcoin, predicting it could hit $125,000 by the end of 2024, regardless of the US election outcome. While a Trump victory could accelerate Bitcoin's rise, the fundamentals are strong enough to drive growth even in a less favorable political climate. Standard Chartered points to regulatory progress and positive developments in US Treasury markets as key factors that will support Bitcoin's continued rise. This long-term forecast is encouraging, especially for those looking to hold Bitcoin through the ups and downs of the market. This week, we've seen a strong recovery in Bitcoin, Ethereum, and Solana, with key institutional players like MicroStrategy doubling down on their BTC holdings. From Indonesia's regulatory advancements to India leading global crypto adoption, the industry is gaining strength. And with developments like Trump's crypto platform and Grayscale's XRP Trust, the future of digital assets is becoming more integrated with the financial world. Thanks for tuning into ChainMind. Be sure to like, subscribe, and hit the bell for weekly updates on the crypto world. See you next time.